Folks, welcome to another Thursday Night Stock Charts Live. Welcome. Hello, Inova Voyg. Good day to you, sir, or madam. I'm not sure what sex you are. What's my take on OPTT? If we have time, I'm going to go to some charts from the audience. I need to go over members first, and if we have time, we'll definitely go over it. MacArthur. Hello, sir. Thoughts on CCIV? We'll take a look at it. Joe Gardner, good evening. Another one with OPTT. Wow. All right, we'll take a look at that one. Something happened with that today? Eric, hello. WG Shocker, Larry. New Louisville Police Chief is a former stockbroker, only 5'4", but she's got a gun. Good. Mr. G, hello. Cedric, good evening to you. Paul M, welcome, everybody. Welcome. Thanks for being here. All right, so what we're going to talk about tonight are we got a lot to go over. A lot. A lot of what we've been talking about, literally going back 8 months, is starting to unfold. And for longs, not in a good way. We are changing our strategy. We have changed our strategy quite a bit. We've been sending out alerts that we've been taking off a lot of our long positions, and we have been very heavily leaning into the short side of this market. That's for the triple Qs. That's working out now. We added more. The small caps, we added more today. We added more yesterday. We added more today. I think we're seeing a blow-off top there. We are short of Twitter. We are short of Microsoft. And those trades are working out very, very well. So I think that this is just the beginning of probably a fairly decent correction here in this market. I'm going to go over the reasons why in a moment. So we're going to talk about parallel poly. I just learned this from Dr. Steve Turley. He's on YouTube. Check him out. Great channel. Really intelligent guy. And parallel poly, we'll go over. I have a chart to go over with you. We're going to talk about earnings tomorrow. Big earnings start. Weekly charts, then chart requests. But first, what I want to do is I want to talk to you about our friends over at TrendSpider. They are a sponsor. And I use them for much of my scanning. In fact, I just did a scan. Rounding top scan, one of my favorites. I did this on a daily basis. I'm going to do it later on. If we have time tonight, maybe I'll do it tonight live, where I change this from daily setups to weekly setups. And what this scan does, the 6-candle bearish roll, it shows stalling of a stock on a daily, in this case, or in a weekly time frame, and then how they're beginning to break. And you can see here with CTAS, I did a scan of the NASDAQ 100, and a bunch of names came up. Take two, breaking down, rounding top, breaking down. ADP, rounding top, breaking down. Dollar Tree, rounding top, not a breakdown yet, but close. CoStar Group, rounding top, breaking down. So I'm going to be setting this up for a weekly time frame. See what's setting up as a good potential short. Also, when I'm doing a scan of the NASDAQ 100, I'm validating my short of that index. So please take advantage of their 7-day free trial offer. I offer free to silver and gold level members. Automate your grunt work, speed up your analysis, improve your accuracy. TrendSpider, you got to have it. Go to their website. They have a demo here somewhere. Explore the product. Here, watch system, demo tour. Use the link below, 35% off. Let's get to our topics. Let's begin with earnings. We'll knock this out. Tomorrow, Friday, JP Morgan Chase, Citigroup. These are all before the bell. Wells Fargo, and PNC Bank, more of a regional bank, PNC, but Wells Fargo, Citigroup, JP Morgan, these are money center banks, and they could roil the markets, especially JP Morgan. So let's remember that tonight you're going to have Vice President-elect Biden rolling out a stimulus plan. I believe it's $1.9 trillion of more spending. I try to do some research about the breakdown of what kind of spending he plans on doing. I know $1,400 is just more helicopter money going out to people. It's not good. It's not good. And I'm going to show you on the chart why it's not good. This morning, consumer inflation surges in December on higher gas prices, CPI finds. Forget about the gas prices. Forget about it. Food prices. We've been talking about this for months. Food prices, energy prices. But here's the dirty little secret that the Federal Reserve won't talk about. This is what they do. Here's a consumer price index. Came in hot. Twice as big as the prior read. But then they say, you know what we're going to do here? We're going to go by the core CPI. We're not going to pay attention to the headline. This is the headline number. We're going to use the core CPI. And that number only came in at 0.1%. What is core CPI? It backs out, you guessed it, food and energy. They pretend it doesn't exist. They call it transient. So inflation is here. And what you're seeing, Lori Lightfoot over in Chicago now is finding religion. All of a sudden, it's time to reopen the economy. My governor here, time to reopen the economy. Election's over. What COVID? No, you got to reopen. That's what you're going to see. What does that cause? The velocity of money. That's going to cause more inflation. It's a good thing the economy's opening up, but it's going to create velocity of money. Remember, almost a year now of money printing. Now you're going to see more and more transactions. That's going to drive up product prices. And that's why you saw today the announcement of $1.9 trillion, the headline number was $2 trillion, of new spending, and yields went like a skyrocket. We're going to go over that chart in a while. Let's talk about parallel poly. Parallel poly is, in the way we're going to describe it, the definition of it is not what I'm using it for. Parallel poly is basically when you have parallel universes. So what you have are the deplatforming from not just social media, but from banking, from technology companies, email providers, law firms. That Parler, which is still down, they were deplatformed not just by Amazon, but by Twilio, their email provider, by their law firm. It's incredible. Who do you rely upon? Gab is the only one that saw this coming because it happened to them 2 years ago. They're unhinged. They're off the grid. They can't touch them. All these big tech companies are begging. They're begging the Department of Justice to go after Gab now to try to shut them down. It's nuts. We're going to go over the charts of all of these companies, the big, four? Amazon, Facebook, Twitter, and who else? Google. We'll go over those charts in a moment. So let's talk about parallel poly for a minute. Up until, these are the so-called far right-wing applications that you could use. And they didn't have much traction, even through the beginning of the year. Then they suspended the president. All of a sudden, Signal, CloudHub, I didn't even heard of these. MeWe, never heard of it. Telegram, Rumble, I have heard of. They're ripping through the ceiling. People are leaving especially Twitter, in droves. You had the Washington Post and the New York Times come out and attack Facebook. The worst thing for these social media companies to happen is that President Trump is leaving office. What are they going to talk about? Now they're going to turn on each other. So the reason why those two publications, if you want to call them publications, I like to call them propaganda machines. The reason why they're turning against Facebook, it's because, not because BLM or Antifa were planning, which they do on Facebook. It was the alt-right groups, if you want to call them that were planning the DC protests on Facebook. Not Parler, Facebook. But they took down Parler. So this is the environment we find ourselves in. This is parallel Parler, Poly. And these stocks, we're going to go to these stocks. I'm going to start off with these stocks because they are getting destroyed. And so they should. Twitter, if I haven't already said it, was short of Twitter. What we do here, folks, is on Thursday nights, what I like to do is go over the weekly charts. And we begin to plan ahead for next week. So Thursdays, we're thinking about next week. What do we want to be? We want to be net short, net long, neutral. What do we want to be? So keep in mind that as we're talking about these charts, a lot can happen. One day makes a difference. On Saturday with members, we're going to go over the week ahead commentary. I'm going to redo all of this again, but the weekly charts will be closed. They'll be locked in, date stamped in history. Then we'll have a better idea of how we want to be positioned into the new trading week. As it stands right now, it's pretty much a foregone conclusion in my book that Twitter, which is down 11% on the week, I think in total, the social media companies lost $51 billion this week in market cap. And I think that's just Twitter and Facebook. Fact check me on that. Could be another company included in there. That's the number I heard. So Twitter down 11% on the week, and it's probably going to keep going. If they rally it, I'm going to be leaning into the short side because it's my favorite short. Why? It's because what is there about Twitter? The only thing that Twitter had in its back pocket was the president and a lot of high-profile conservatives, which they threw darts at. Now they're gone. They're leaving, voluntarily leaving. 70,000 others deplatformed. What are they going to talk about? Even the left is leaving Twitter and going over to Gab and pollute over there. So Twitter is in all sorts of trouble. They never, ever diversified their business. They are a one-trick pony. Not much else going on except for Periscope, which is very good. But other than that, there's not much going on there. Facebook, different story. But you have the ire of the media turning on Facebook. Not good. Plus to mention the government. So Twitter down on volume this week. Daily chart. We're very close to taking out the lows of the week, Stokes week. We're going lower here. Volume very high. Institutional distribution. I think the selling has just begun. They may try to defend this 44 mark and try to rally it back. I think it fails. So at some point in time, if we begin to see a bottom get put in here, and I think it's going to rally, we'll scalp a profit, allow it to rally back, and then we're going to look to reshort into any strength. I think that Twitter is going to be, keep in mind where Twitter was going back, choose a monthly chart, going back to when the president took office. Twitter prior to that was trading down with a 13 handle. The president began to run for election, inaugurated, off to the races. So far, since they deplatformed him, outside reversal bar, and it's only going lower. So this is a no-brainer. Unless they get bought out, which I think it's still too expensive to get bought out. What else do we have here? Facebook, weekly chart down 8.2% and going lower. Note the lower highs on these stochastics. Stokes down below 50, tend to fade. So if we get a rally next week, I'd be looking to open up a short position. We're already short of the Qs, so technically I'm already short of Facebook. But that would be an opportunity to lean into the short side of Facebook. It has clearly broken trend. We have a double top here, and now we have broken down to new lower lows. Facebook, done, going lower. Microsoft. Okay, I've been talking about Microsoft being a bubble. I'm a broken record on this for easily 8 months. The reason why, we'll come back to this chart. The reason why is this. Yearly time frame, Microsoft. RSI remains. This is the first time in 8 months RSI is down below 90. We now have 89.5. This is a yearly chart. Drill down to a quarterly chart. RSI still at 86.79. Note, we are rolling over. Back to the weekly chart. So we have a lower high, prior high 232.25, lower high 227.52. We break down below 199.10. We're coming down here to retest the lows of, what was the low here? 195.75. If that breaks, Microsoft, done. That would be a confirmation breakdown on Microsoft. We're going to remain short of this one for a while. Google, of the group, Google is holding up best. However, I think that at some point in time, they are going to succumb. A certain video platform who'll go nameless, deplatformed a certain individual who lives in the White House. And I'm fairly confident that the DOJ is going to continue on with their antitrust action of this company. And the EU is ticked off. So expect more out of the EU in particular. We haven't broken trend yet, but we already have our lower high. 1694 is the floor on Google. If it breaks, all over. So these are the horsemen. They were the leaders out of the COVID sell-off. Now they are lagging and lagging dramatically. Here's the weekly chart of the Qs, down 1.5% versus, hate this, IWM weekly chart, which is up nearly 3%. It was higher. So drastically underperforming the small caps. Now let's talk about why this market is probably putting in a top. I'm not saying it's going to crash tomorrow, but I've been warning for a long time now. Beware of the day when you see both the U.S. dollar and bonds dropping at the same time. That is a crisis of confidence in the United States. And if you don't want a crisis of confidence in the United States, you got to smash the like button. All right. I thought I'd be cute there. Hopefully that works. But seriously, you don't want to see the U.S. dollar and bonds drop in tandem, because what does that mean? Commodities are priced in U.S. dollars. So what does that mean when the dollar drops? Commodities go up. That's inflationary. Then here's the dollar. We were up last week, rallied this week, stalled. We're probably going to roll over and head down lower. We were up higher this morning. Bearish reversal bar on the dollar today. We were higher, closed lower. Take a look at bonds, weekly chart. We have broken down here. So we have the dollar, which is in a long-term downtrend. Yes, we are up on the week. We were up last week, but it's a dead cat bounce. The longer-term trend is down. The trend on bonds is down. Not good. So what does it mean that bonds are going down? Well, at the time where you have prices going up for goods, food, energy, borrowing costs are going up as well. So unlike when they did the money printing coming out of the COVID sell-off, yields were going down, spending was going up. The economy was able to absorb it. Now things are changing. And yields are going up, commodity prices are going up. That is a horrible, horrible mixture, especially when growth in the economy is anemic at best. Yesterday's jobs numbers, this morning's jobs numbers, huge spike in, I think it was the biggest number since when? August? Biggest number since August in new jobless claims today. Let's go on. Here is something that I've also been talking about, and I'm shocked that we haven't broken yet. So this chart here is of the yield curve. I'm not going to spend too much time here because I've already eaten up enough time going over the other charts. But overlaid in blue, S&P 500. Overlaid in candlestick is your yield curve, which is steepening. Go back in time. Whenever you get a steepening yield curve, at some point in time, the stock market buckles. Just as it did back here during the dot-com crisis. Boom. Lived through that one. Just as it did here. Financial crisis. Yield curve was steepening. We rolled over on the S&P 500. I think we're close. I think we're close to a rollover here. Look at the 10-year yield. I drew this red line last week. We are now up on the week. I think we're going higher here. Tips, Treasury inflation protected securities. The only reason why you'd buy them is to hedge against inflation. Well, if there's no inflation, why are institutions buying the tips? We're just off of all-time highs here. We are flashing a bullish reversal bar on the week, a very bullish setup. So this is the market sending you a signal that there's inflation out there, despite what the Federal Reserve says. Don't listen to them. Listen to the charts. Watch the charts. The VIX. Another sign that we might have. Remember, one trading day left to go. A lot can happen. These charts can change, but they're signaling trouble ahead. The VIX was down on the week. We are now flat to are we up or unchanged? We're up. With the doji star formation, a sign of indecision, we are forming what I believe to be a W formation, and we're building the right side of that W. So this does not bode well for bulls. This is why we've been adding to shorts slowly but surely. The Dow Transports looking good, weekly chart. However, daily chart. Extended, topping action. Beware the transports. Dow Jones, weekly chart, down on the week. No follow through on last week's bullish key reversal bar. What time we got? 6:24. S&P 500 down week. No follow through on last week's bullish reversal bar. We already went over the IWM. What else do we have to go over here? Banks, very strong. Yields going up. As long as the overall market holds up, banks will go up. As long as yields keep continuing higher, this is a trade to be in, assuming that the market doesn't roll over. Technology. Here's a tale of two charts. There's a divergence forming here in technology. Weekly chart, XLK, down on the week. However, semis are up nearly 4%. Very odd. I'm not getting it. Even Nvidia's down. Biotechs. Very strong week. Bullish key reversal bar. It looks as though they're going up higher. I don't know why this is doing this. Consumer discretionaries. Doji star formation. Down week. No follow through on last week's bullish key reversal bar. Daily chart. These are your Starbucks. Not a good day today. Bearish reversal bar. Energy, very strong. Why? Oil's up. Here's oil. Oil's up. Dollar, move down. Oil up. Inflation. Gold. Off the lows of the week. We are now up on the week. Holding support. We really need to hold 1850. We close at 1851. Gold miners, of which we are long. We are long. We sold covered calls yesterday. We booked profits. I said 30%, near 30% in the alert I sent out. It wasn't. It was more like 21%. So my bad there. I want to correct the record. So I covered my covered call position. I bought the close, thinking that the dollar was going to break. The miners would move up higher, which they did. However, they faded at the back half of the day. So I wanted to buy more. Can't. They're not behaving well. Gold money. I'm in talks to be a spokesman for them. So just a little bit of disclosure. We also own these shares. And man, have they ripped this week. Up 28%. I can't buy more here. I want to buy more. Reason why I can't buy more, it's very extended on a weekly time frame. Trading above the third standard deviation Bollinger Band. More to come, members. Once we get a nice orderly pullback, we'll look to buy more. Gold money ripping. All right, let's do some chart requests. And folks, in all seriousness, if I could ask you to please smash that like button, subscribe to the channel, I'd really appreciate it. And don't forget, I don't know if I'm going to be deplatformed tomorrow. I don't know if anybody knows Timcast. He has a YouTube video. YouTube demonetized him today. He'll be banned soon. And he's a really milquetoast type of guy. He's a good guy, hard worker. I don't always agree with him, but I respect his right to speak. They hammered him. So I don't know what's going to happen with me. I'm sure if they went back through my archives, they could find something. So, and they do. They go back through your archives. So there's a link below. Get added to any one of our email lists. Just in case I'm not here one day, the channel's gone. At least I have your email address. We can keep in contact. And I was around before there was social media. I'll always be around, so I don't really care. But I don't want to lose contact with people. So let's get to some chart requests. I need to go to members first. As a matter of fact, I want to do this. If everybody's cool with this, I think we're good on time. I want to bring up, I want to do a weekly scan. And this is the same version you get if, I got to save this as a weekly so I don't have to always do this. if you are a silver or gold level member, because I want to see what the market's looking like from a weekly view. How many rounding tops are we getting? And it'll be interesting to see how many have already broken as well. Because right now, it's your banks, biotech, energy that's leading the charge higher, along with the small caps. All right, let's do this. I'm doing a scan of the NASDAQ 100. Just one. Western Digital. This is setting up to be a nice short. Here's the beauty of it. Take the automated trend lines off. We've already broken down. Double top. And we've already broken down below support. We did so actually 2 weeks ago. Now we're bouncing back in an effort to try to recapture. These are traders in denial. This is probably going to fade. Another couple have just popped up as well. VeriSign. Let's go to the weekly chart. Weekly chart, rounding top. We've broken support. Kraft Heinz, really? I actually like this chart. This is a daily chart. Oh, weekly chart, yeah, we've broken down. So a good scan to find shorts of the market. I doubt we're going to find many in the Russell 2000. I just want to check it out because they've been ripping. We'll wait for that. While we're waiting, let's go to VIAC. Viacom. Beautiful breakout here on Viacom. I think we went over this one last week. Yep, we did. We have a breakout. But the caveat here is that you have overhead supply right here. So I would be very, very careful. There's a ton of overhead supply up here at 47.77. So while we could move up a bit higher, be careful. There are sellers above. They're going to want to get made whole. There it is again. Daily chart. There's more upside here. I would be careful. We're flirting with the third standard deviation Bollinger Band. We're going to ram right into that upper band of resistance. I would not open a new position. If it's a swing trade, I'd be looking to book some profits here, especially in light of this market. I would just make some profits real. So VIAC longer term looks good. Short term, resistance above. I would not initiate a new trade. JP Morgan reporting earnings tomorrow. A monster. They are buying back shares in this quarter. We are dead smack at resistance. 141.45 is resistance. Where do we close? 142.75. Weekly chart. We're right there. So be careful. Pay attention to their loan loss reserves tomorrow. And remember that a lot of the I forget what the word is. It slips me. The allowance with the government for people, forbearance. That's expiring soon. So you may see a tick up in people with foreclosures. So in certain areas of the country, this housing boom may be short-lived. Daily chart, you can't buy here. Earnings tomorrow, we're at resistance. Probably longer term going up higher. If the market holds up and it pulls back, I'd be a buyer of the dip. Bunch of results came in. Let's go to a weekly chart. Again, for those just joining, this is a scan for shorts using TrendSpider. I don't like this one. We have a lower high, no break though. This one, lower high. We aren't breaking at current. No break to a new lower low yet. Do I know any of these? I'm not going to go through all of these. But you could see, rounding tops, they're now beginning to break down. And these are small caps. And the small caps are doing very, very well. But not all of them. Rounding tops, lower highs. Interesting stuff. Okay, let's go to, take that off, take strategy tester off. There we go. All right, where's my RSI? Why is that pink? Well, I can't even look at a pink one. All right, let's take this off. I'm bored. Off. Good. I'll fix that later on. All right, let's take some requests from the field here. Oh, OPTT we got to get to. Multiple requests for that. Did anybody pop in? What happened with them? Let's see. CCIV I got. X. U.S. Steel. Oliver, hello. U.S. Steel X calls. Going to give it to you. You're going to sell covered calls or you're going to buy calls? I don't like that trade if you're going to buy them. Lots of topping action. I checked on U.S. Steel today. Lots of topping action there. Be careful. HD pins. Rick Roofing. Hello, sir. All right. All right. Let's vary. And NK. All right, let's do it. I'm going to close it off there. OPTT. Wow, big reversal bar yesterday. Now I see what you guys are talking about. All right. All it is you got a lot of overhead supply on OPTT. That's all. Sellers from back here. Those who bought poorly back here, back here, back here. They just want their money back. It's going to take time to work through it. Weekly chart. I think the best bet to do here is simply do this. $3.26 per share, breakthrough, no sensitivity. I only care what it closed there, so I'm going to use a 4-hour bar notification. OPTT weekly. I still like it longer term. This is just simply overhead supply. You know what? In fact, I do want to buy the shares. 10 days, active, good to go. I'm not going to think about it until that fires off. I only want to know when it breaks out. Daily chart, consolidation. I wouldn't touch it right now. Especially not with this market so iffy. Let's see if I'm missing something here. RSI trending down. We're down below 50 on these Stokes. Rallies tend to fade. Wait for these Stokes to get back up above 50. It's in no man's land right now. There's no momentum. A lot of overhead supply. I would just avoid. Wait for the breakout. Wait for the Stokes to be firmly above that 50 mark. Then swoop in. CCIV. Churchill Capital Corp. SPAC name? Oh, yeah, it's got to be. What do I say here? Listen, it's a speculative instrument. Weekly chart tells me nothing. So a lot of selling today. Let's use the raindrop charts. Yeah, man, you saw a lot of selling into the close. That was a 4-hour chart. Daily chart not looking good here. It's extended. You got to wait. You got to wait for a pullback, nice orderly pullback. You know, in a few days, let's revisit it. Right now, too much risk, not enough reward. I would avoid this. WDC. Oh, Western Digital. We just spoke about this. This came up on the screener. A bit of a rounding top here. It's not a short. If it holds 48.13, that's a good thing. The monthly chart looks very, very good. What it's doing here, you have a nice base that was formed. It broke out last month. This month, it's doing a retest of the breakout point. I like Western Digital. How much seasonality do we have here? We should have a lot. It's an old company. Since 1987. Up 64% of the times in January. Time to buy this one is in September. You get a nice trend through the new year. So Western Digital looking good here. I think you could buy this. If it breaks down and closes below 48.13, you may want to stop out. But I think right here, right now, is a good point to nibble. Scratch the itch. You're at support. This is what we always talk about. A lot of times I'm saying, we're extended, wait for the pullback. Here's the pullback. Right? So you're getting in at a good risk-reward entry point. Let's take a look at a daily chart. A little bit of a fade on the day. I don't see a compelling reason to go running in tomorrow, especially with the markets under a little bit of pressure. So if it pulls down, touch, bounce, a little bit of sensitivity. We don't want to be greedy. Quick alert, 10-minute bar. WDC. Monthly through daily support. I got a spell check. Thank you, TrendSpider. I like it. So Western Digital, it's okay. It's okay. Longer term, I like it better. Breaking out of a long-term base. Home Depot. Haven't looked at this one in a while. HD. Wow. Rough couple of days. Here's the value of the trend lines. Know where your resistance is, because if you press a button, you wouldn't have bought here. You would have known where resistance was. Monthly chart. So this is a manually drawn resistance level. And the last time I spoke about this, because I remember it now, we're in a wedge formation. And it's a nice formation. It's a great consolidation, a multi-month consolidation. Given the housing boom, I'm kind of surprised that they're not doing better. But as long as we hold 262.34, and if we break out, the longer the consolidation, the greater the validation of the breakout. So I like it. I still think that there's more sideways consolidation to be had here. I don't see a compelling reason to go buying it right here, right now. Weekly chart. Yeah, I mean, you had a W formation set up. You have a higher low here. They tried to break it out above the pivot point at 275.08. It went as far as this upper band of resistance, and it got rejected. That's a tell. There's still too many bears here, still too many profit takers exiting Home Depot. You need for them to get out. And today, yesterday, were not good days. So you're looking to get in, wait for one of these support levels to get hit. $263 looks good. A little bit of sensitivity. Don't be greedy. You could trade this up to the upper band of resistance. Wouldn't be a bad swing trade. Keep it active for a few days. We're good to go. Right now, the market's just telling us it's probably going lower. Don't catch a falling knife, especially in this environment. Pins. Social media, I don't know if these guys have been politically correct and pulling their nonsense like all the other companies. But even if they haven't, they may fall victim. Lots of topping action up here at 75.27. If you break 64.54, it's coming down here to around 55 bucks a share. Weekly chart. Nice consolidation on a weekly time frame. They tried to break it out They tried to break it out earlier in the week. It was rejected. So be careful here. The market's telling you that there are sellers up here and they want out. They're booking profits because I believe that we're at all-time highs. We're very close to it. Yeah. So there's no overhead supply. This is all profit taking. So they tried to break it out yesterday. No bueno. Rejected, just as they did back here. And today, another down day. You do have a bit of support. This is the value of knowing these volume shelves, these VWAP shelves. And right here, if this breaks 69.25, if we close down below that level, we're probably going to come all the way back down here to 64.55. So watch for 69.25. That's critical support. So very important, 69.25 to hold. Now, if we overshoot, then rally to close back above 69.25. Interesting trade. Maybe a time to buy. Not right now. We need to wait and see. Technical analysis is not a crystal ball. It just gives us the probabilities of what's going to happen. Simple as that. Very. VERI. Franklin. My daydream seems to run away with me at times. You and me both, Val. Very, very, very is very overbought. Trading above the 3D Bollinger Band. Beautiful chart. You have overhead supply back here from 2017. Weekly chart. Beautiful continuation breakout this week. Very, very nice. Pardon the pun. I mean, man. Oh, look what they did this week. 34.06 was the breakout point. What did they do this week? What was the low of the week? 34.20. Close enough for government work. This is a beautiful retest of the breakout point. This was resistance. They broke it out. This is trader OCD. This is a perfect example of it. I know it because I have it. Traders wanted to pull back and confirm, touch. What was resistance would now be support. They got it. They bought it. Took it up. Those are technicians. Daily chart. Good day today. Bit of a fade as noted by this candlestick. Wick, shadow, call it cupcakes, call it what you will. All it is that you saw some profit taking. But beware here. I can't get this out of the back of my mind. This is why I can't buy the shares. Look at where we're trading. We're midway through the month. I don't think that we're going to hold these gains. Just like we didn't back here, just like we didn't back here. We're probably going to get a fade here, especially if this market, as I believe, is beginning to begin the process of rolling over. You're seeing it with the Qs already. The Qs haven't made new highs. Excuse me, not the Qs. The leadership, Microsoft, Facebook, Twitter. Not that Twitter's a leader. These companies peaked out a while ago. So beware here. The market's beginning to weaken. So this is not a time to put on a new trade here. I'd be looking to exit the trade. Trailing stop loss order. Let the market take me out. Trader OCD. I have it. Could be another one, Bob. Another t-shirt? Yeah. That's a good one, yeah. You guys come up with some good ones. I am not gifted with, how do you say, that artistic flair. I'm a banker, for Christ's sakes. What else do we have? VNK, what was this one again? I can't read my own handwriting. It's embarrassing. WDC, didn't we go over WDC? We did. WD Shocker, SPHD. This is a Dow dividend play. You know, if yields are moving lower, I'd be more optimistic. We're at a big volume shelf here. And we're just shy of it. It acted as support for many, many months. Now, you know for a fact that's going to act as resistance. Weekly chart. It's probably going to press up a little bit higher here. You're going to see sellers soon. Yeah, I think you have a little bit of upside potential here, but this is the value of using multi-time frame analysis. You need to know where a stock has been to identify the probability of where it might be going. And the probability here is that you're going to at least get a stall. At worst, we begin to peter out here on SPHD. So I don't like it to initiate a new trade. This is more of a longer term investment type situation. So where I long, I'm getting paid a divvy. All right. But I would not initiate a new trade here because you're going to lose on any pullback where you're getting paid on the dividend on your net asset value. It doesn't make sense. Back here was a great time. You had a lot of upside on the NAV, and plus you were getting paid a dividend. All right, what else do we have? I can't read my own handwriting on one of these. It ended with a K. If you're out there, NK, that's it, NK. Nanked West. Frothy. It's coming off the highs yet again. A lot of hot money in here. Weekly setup, very similar to the monthly setup. Daily chart. Oh, no way. No way. Big reversal day. Big reversal day. At a bare minimum, I think what's going to happen here is you're going to fill this gap. 1655. Now, if that fails, you could retrace all the way back down to $12.54. Be careful here. Be very, very careful. Okay? All right, we have 2 minutes to go. Sam Miller, please do SIFI, SIFY. SIFI. NAC? Which one do you want, SIFI or NAC? I'm going to do SIFI anyway because I like the daily setup here. Let's first get a feel for where this thing's been. Still trading above 3D Bollinger Band. Don't like that. But this is a monster beta name. So I'll give it a pass. Weekly chart, big topping action. I think the action's to be had. The setup is to be had on the daily time frame. I'll take a look at that. The value of the automated trend lines. If you would have had this up, take a look at that. Picked off. But I think what you need to do here is wait. 206. We close at 231. This is a monster beta name. Wait for the pullback. Scratch the itch. Stay small. And then, I don't know if they're going to let me do an alert here. They're doing it. Yep. I want to know when we break out. There you have it. Until those fire off, I'm not going to watch it. Rules-based approach. If this gets hit, we scratch the itch. Maybe. If it breaks out above this upper band of resistance, that proves that we're accurate in our call. We'll add more. Franklin, yes. Hit the like button, please, folks. Thank you very much. Follow, subscribe. Share with a friend. All right. I bought NAC and SIFI calls both for less than $10. $10 a contract? That's good. They must be fat premiums. Is that accurate? $10 a contract? What's your strike? Oh, you bought the 250 calls on SIFI going out to 2022? Is that accurate? NAC, Northern Dynasty. I think we went over this once before. We did. Good breakout. Let's take the trend lines off for a second. Yeah. Good breakout. Monthly time frame. A little bit of a fade here. Weekly chart. I'm going to overlay on the weekly chart. This is where I would buy it. Just as we spoke about earlier, about retests. That would make for a great risk-reward entry point. And I would keep this active for go 15 days. Daily chart. So you can see here on this chart, this daily chart, I have a monthly overlay and my alert is set right there. So we're good to go. Let this come in more. This is probably going to come in more. You know, given the fact it's 49 cents, it may just be worth it to nibble on the filling of a gap. Let's go to Falcon. How you doing, buddy? All right. Folks, thanks for joining in. It's past that time. My voice is going. I want to thank everybody for coming on board. Love having you guys on Thursday nights. We also do this on Sunday nights. So if you're not on our email list, there's a link below. Enter it just in case I get deplatformed. I'll pop up somewhere. So we have the website. We'll always have that space to pop in a video player, and I can always upload videos. I have plenty of software to do that. So thanks for joining in. Everybody have a great night, a profitable trading day tomorrow. Have a great weekend. Be well.